The annual inflation rate in the US slowed for a sixth straight month to 6.5% in December, the lowest since October of 2021. The expected inflation rate for December was 6.5%, which means we have met expectations. Today, the Fed Reserve Bank of Philadelphia leader Patrick Harker said that while the central bank needs to raise rates more to cool off inflation, it can probably do so at a much slower pace, essentially saying that they are ready to shift future rate hikes down to 25 basis points instead of 50. And after today's news, Bitcoin has hit 18,900 as I'm making this video, which means it's getting likely that we're going to break the short-term downtrend line. But by far the biggest hurdle in front of us is actually going to be the log scale downtrend line, which stems back to the $69,000 top in 2021 from 69K to 48K. The log scale downtrend line is at about 21,500 depending on how fast we get there. Now, I want to talk about the topic of yesterday's video, which was the weekly RSI. Guys, we did it. We actually broke above the 40 level on the weekly RSI, which means we've just done something that Bitcoin hasn't done in years. This has only happened a couple times before. And whenever we're in a bear market and we have a major RSI downtrend, the break of that downtrend signals that the next expansion phase is starting. So what we need to confirm this is we need the Bitcoin weekly candle to close high enough so that the RSI closes above the 40 level, and that would be pretty good confirmation that we have gotten the expansion phase breakout that Bitcoin classically plays out in previous cycles. This cycle has been nothing short of complete devastation. Up until the past couple days, it just seemed like it was never going to end. It's going to take a lot of convincing for people to actually get behind this move. I know a lot of people are going to be very skeptical, as they should be, and I'm also skeptical as well. As much as I love to see the RSI on the weekly breakout, I still need to see some more convincing price action. Right now, Bitcoin is trading just below 19,000, and we did break above this short-term downward sloping resistance today. And above us, we have the November horizontal resistance at about 21,500. And then possibly more important than both of those is the 200-day SMA. And I think the 200-day SMA is probably going to have more of an effect on the market than either of those resistances. Currently, the 200-day SMA is sitting around 19,500. As you can see on this chart, it has been many months since we've even seen the 200-day anywhere near the current price action. So I think this is really going to be the key. We got the RSI weekly breakout. Now we have to break above the 200-day, and that's where I think changes can happen. And literally, as I'm editing this video, Bitcoin is breaking above 19,000. And this is pretty cool because now we're only $500 away from the 200-day SMA. And if we break above that, we do have some fib targets that have some confluence with some previous resistance zones. Now, as awesome as the charts look right now in the short term, we also got to be mindful of the fact that we are getting warnings of a continued recession. World Bank warns the global economy could tip into a recession in 2023, and we've heard lots of talk about this. So we're going to have to wait and see how things really play out. At the end of the day, fundamentals override the charts. As we are all aware, Bitcoin has been extremely correlated to the stock market during this downtrend. And right now, the stock market is sitting on a resistance. So if you're a trader and you're looking at this from risk to reward, buying right now would be buying at the area of highest risk unless we get a confirmed breakout of the downtrend for the S&P. And if Bitcoin is correlating to the stock market heavily in this downtrend, well, if the stock market is at a high risk area, well, then it kind of means the same thing for Bitcoin despite the charts. Of course, there can be short-term decouplings, but generally Bitcoin is likely to remain correlated to the stock market. So definitely consider those risks as well. But that's it for me today, guys. Hope you enjoyed this video. Smash the like, subscribe, and I'll see you all in the next one.